next is the latest development in the stock market, and joining us via Zoom is
Ola Oyedokun.
now the stock market closed in negative territory again on Monday. What's the bearish posture in the market?
Yeah, thank you. I think the major cause is, they say the funds will dovetail to where there is higher investment returns. In investment, we say investment is a function of risk and returns. Well, you find out that some risk-free investments per se, that is government securities, are giving high returns. People will not want to patronize the high-risk investments that use maybe less returns, if I may so speak. Because if you look at the federal government instrument that came out this May alone, TB auction that was done on May 8th, posted 20.7% returns for 1 year. Then the federal government savings bond, the 2-year one returns 17.4, and the 3 years 18.4. So when you see that you are not really taking risk and you are getting high returns, it may be difficult for you to go and patronize the higher risk with uncertain returns. And you see that so many of the stocks have declared their dividends, and then the stocks have been marked down for dividends. So people are now awaiting dividends again. So after markup, some people believe that it may take some time before they can even wait to enjoy some, dividend of their investment in terms of capital appreciation and dividend. So many people want to shift their funds to where they can get higher returns, which in this case is fixed income securities. And apart from government securities, we have a lot of private companies' commercial papers that yield as high as between 21 to 27.5, returns per annum for like 180 days or 270 days. When you are knowledgeable about investment and you know that all these investment vehicles are there, it's somewhat difficult for you to say you want to put all your money in equities. So people will be selling equities to invest in risk-free, higher returns securities. I think that's one of the reasons that made the equity market to go down.
All right.
Yeah.
Nigerian banking sector have suffered a sharp decline in the second quarter. Could this be attributed to the CBN recapitalization exercise?
Yeah, I think yes. One can allude to it that so many of them will have to go for rights. And the principle of rights is that one, it has to be offered to existing shareholders at a lower price. So many people that believe that when the rights come up to beef up their capital from the current 25 billion to I think about 500 billion for deposit money bank that operates internationally. So, for them to meet their minimum capital requirements, they have to do rights and public offer, as the case may be, and they have to do it at less price. So people may want to sell now when they believe the price is high, and then buy the right issue at a lower offer price. So if the supply, in equity market, we say the market is a function of demand and supply. So if many people are trying to supply or sell, now that they think that the price is high, so there may be some sort of loss in the market and the price will come down. So I think the right also has an impact, apart from the fact that the fixed income market is more attractive for now. So that's just my thinking.
All right. So what should we expect from the market in the last part of second quarter?
Yeah. Like some people will say, the capital market cannot die. And, just like economy is cyclical, the capital market is also cyclical. When it goes up, it comes down. I believe there will be positive returns in the news in the markets that will drive the prices of equities. For instance, as a quarterly report is coming out, and if they are very attractive, many people will go into it. And it's not only the banking sector that is affected because of the high returns on the fixed income securities. If you look at even the productive sector too, especially because they are battered by the forex distance. If you look at stocks like MTN, Nestle, even the big Dangote, whatever, they are trading even lower than what you can think a bank has lost. Some of them are still living in the old prices. If you want to sell them now, you can't get them sold at the price they are carrying. So even if you have them at 10%, you may not get it. So I'm not, I'm not trying to discredit or market whatever, but we see some stocks that have sold about 1,300 plus, maybe in less than 1 year ago, and they are selling at less than 800 naira now. So they are not banking stocks, but the forex, the problem we have with the naira, it's also affecting the market and the productive sector of the economy. So, but I believe that as things get better, as positive news come, the market is bound to turn up before the end of the second quarter.
Thank you very much, Mr. Kola Oyedokun. It was
Thank
nice
you
having
very
you on the program. Thank you very much.
Thank you.
Moving on, reactions have continued to trail IMF's Article 4 consultation with Nigeria. Earlier, the International Monetary Fund, IMF, commended Nigeria's new administration for implementing bold reforms in revenue mobilization, governance, and social safety nets to address significant economic and social challenges. The multilateral organization, in its latest Article 4 consultation with Nigeria, emphasized the importance of steadfast reforms to restore macroeconomic stability, reduce poverty, and support inclusive growth. The assessment underscores the need for tight monetary policy, exchange rate flexibility, and building reserves to restore market confidence. Recommendations include scaling up the cash transfer program to mitigate food insecurity, implementing comprehensive revenue mobilization strategies, and enhancing fiscal discipline. Close monitoring of financial sector risk and regulatory reforms are also highlighted, alongside the necessity of reforms to enhance the business environment's governance, human capital development, and agricultural productivity for sustainable growth and resilience. Well, joining me to talk more on this is IMF resident representative for Nigeria, Christian Ebeke. You are welcome to Business Express.
Thank you for having me.
Going by these reports, I mean the 2024 Article 4 consultation, Nigeria seems to be on the right track with other recommendations offered by the IMF. There are, however, issues of cost of living, delay in implementation of minimum wage, availability of CNG vehicles, and increase in electricity tariff, which had added to the cost of doing business in the country. How can all of this be addressed?
I think this is a good question, and thanks again for having me on the show. I think the Article 4 report that we published on last Thursday makes a very big and comprehensive policy recommendation in different areas, right? So the first thing that we have to acknowledge really is that this administration has implemented bold and challenging reforms that were not easy to implement. This administration also inherited significant macroeconomic imbalances. You know, inflation was already trending upward before the administration came into power. There were already pressures on the foreign exchange market with reserves that were declining. And there were pressures also on the exchange rate. And importantly, there were also revenue challenges. You know, Nigeria for many years has collected very, very little compared to other countries of the same size. The tax to GDP ratio last year just was 9% of GDP. So a lot of imbalances were accumulated over the years, and the administration took some bold steps. Now, what does the report say? The report recognizes that there is currently a lot of pain for Nigerians. Food inflation is 40%. Overall inflation is still trending upward, even though we expect CPI inflation to moderate for the remaining part of the year. So the starting point is really that there is a lot of pain for Nigerians. And what we are really insisting on is that it's important that these reforms continue, but they should be complemented with an equally strong social agenda. That's why we are really pleased to see that the administration is revamping and accelerating the payment to vulnerable households. There is a scheme now sponsored by the Ministry of Finance together with the World Bank, targeting 15 million household Nigerians, which is approximately 65 million Nigerian. This scheme will deliver needed support while these reforms will continue to be unleashed and implemented in a faster manner. So again, we are really pleased to see that the administration is continuing on this needed reform. And what we are calling for, as you said in the intro, is really to make sure that there is a social protection system in Nigeria that is strong enough in targeting the most vulnerable. We cannot cope currently with the reforms.
Great. Now, some critics argue that Nigeria's reform efforts lack concrete results and are merely cosmetic. How do you respond to such skepticism?
You have to understand that, fixing an economy that has been distorted for many years because of, prices were not really reflective of supply and demand. Monetary policy was not really focusing on monetary policy and price stability, but instead monetary policy was busy performing quasi-fiscal activities. You had limited fiscal space because revenue was low. And one important statistic that people have to have in mind is really, the share of revenues that goes into the repayment of interest on public debt is 70 to 80%. So 80% of what Nigeria collects in terms of revenue is used actually to repay debt. So when you have limited fiscal space like that inherited by the administration, it's important to start thinking about a comprehensive package that touches really on all areas, right? First, addressing the cost of living crisis is what the central bank is focused on doing now. They're trying to stabilize inflation. They have tightened financial conditions. They are also working together with the finance ministry in coordinating policies. You know that in Nigeria there has been this practice over the years of financing directly the deficit by the central bank. We call it ways and means. So now there is a clear plan to really terminate this practice and make sure that the deficit is first of all moderated but also financed through market ways. And you have the issue of the foreign exchange market. The central bank has deployed many reforms to encourage the price discovery. The Naira is still adjusting to this reform, but what we can also see really is that since the tightening of monetary policy in February and the foreign exchange market reform that were implemented since January, we have seen at least $3 billion come into Nigeria in terms of foreign portfolio flows. So addressing the foreign exchange market is also going to help reduce inflation, and inflation is really a tax on the poorest. But on the fiscal front, as I mentioned earlier, the focus should really be, the immediate priority is to alleviate the pain on the most vulnerable Nigerians. So that's why we are insisting throughout the report to accelerate this direct support to vulnerable households. But how do you finance it? You need really to increase the revenue mobilization in a way that is still socially acceptable. We are pleased to see that the work of the Presidential Committee on Fiscal Policy and Tax Reform is really advancing. There are many reforms that are proposed there that to us make a lot of sense, focusing really on compliance, focusing on making sure that the number of taxes are streamlined, making sure that there are other niches that can potentially be tapped on to really increase the revenue of the federation. And as I mentioned earlier, making sure that the financing of the deficit by the central bank should be something really of the past. This is not really what we see in modern economies, and we are pleased that this is one of the top priority of the central bank, but also the finance ministry.
That's great. Christian Ebeke is the IMF representative for Nigeria. Thank you very much for coming on the program.
Thank you.